I'm proud to welcome you to a special series of the Exceptional Advisor podcast. Hi, I'm your host, Bob Powell, and over the next several weeks, this special series will highlight exceptional advisors in these extraordinary times. We hope this series helps you to better serve your clients, differentiate yourself from the competition, and enhance your ability to communicate those differences in light of the unique challenges and emerging norms of the current times. Today, my guest is Michael Falk, a partner at the Focus Consulting Group and author of Let's All Learn How to Fish to Sustain Long-Term Economic Growth and Get to Work on Our Future. So, welcome to the podcast, Michael.
Thank you, Bob. Great to be here with you.
It's a pleasure to have you on the Exceptional Advisor podcast. And before we get going, I'd like you, for the benefit of our listeners who may not be familiar with you and your work, to give us a brief overview.
Well, wow, brief.
Brief, right.
30 years and 30 seconds. How's that?
That's fair. We can double on some of it.
I'm going to invite everybody to think a third. A third as a private wealth advisor, a third as an institutional money manager, a third as a consultant to both wealth and money managers. During that time, however, I was also adjunct faculty and I taught CFP certificate courses. I have obtained the CFA designation and the CRC designation as well. I'm the author of 2.3 books. I'm rounding. 2 books that I've written and then 1 book that I co-authored with 2 colleagues. The 2 books that I've written, I care deeply about. They are my purpose in life. And we can get more into that as you wish, Bob.
Sure. Well, let's double back on the books in a little bit. Right now, I just want to sort of do some table setting, which is we began this Exceptional Advisor podcast series a long time ago. And then when the COVID-19 pandemic sort of struck, we pivoted a bit and we started talking about exceptional advisors in extraordinary times. And we began interviewing advisors about how they're managing their business and how they're managing their clients during these times. And all in the hope of helping perhaps young advisors who have never experienced this kind of event before, this kind of black swan event. And I know that you have been advising advisors with regard to what to do with their business and what to do with their clients during this time. So let's start by having you talk a little bit about your experience and what you've been telling advisors to do during these times.
Yeah, happy to. And so we've got COVID times, and then I've got my own personal version of COVID times that I'll get into a little later. But what I'm saying to advisors is the work hasn't changed. The connection point has changed. So you used to sit face to face with your clients, and now, unfortunately, it's not really safe to do so. But the work itself hasn't changed. You still need to listen actively to hear what they're thinking, what they are concerned about. Because if you're going to be their counselor, their coach, their advisor, whatever term you prefer, it starts with listening. And whether we're in a room with someone or we're over a Zoom or we're over the telephone, that doesn't change. Mm-hmm. So start there and understand that they have real fears and concerns. Not that they haven't always, but they're heightened because of the current situation with stay-at-home orders or something similar. And or for people who have some sort of advanced condition where it's even more risky to go out and about. Well, you know what? You as the advisor, you're experiencing the same thing. You have to make the same decisions for yourself and your family. How do you go out? Do you go out? And if so, where? When? So you can relate more to your clients during these most difficult times. And candidly, that connection, being able to relate more, will help to deepen the relationship and allow you to be more effective in your counsel.
I take it that that's one way for an advisor to showcase their value, that they are making sure that they understand what their clients' fears are at the moment.
Yeah, because on this one occasion, and it's unfortunate, it's not a positive, but on this one occasion, we're all living through this very significant health event together. This is not your issue versus my issue. This is all of our issue. So it's actually arguably a little bit easier to connect.
In many cases, the advisors I spoke to during the pandemic, very few made adjustments to their clients' investments and their financial and retirement plans. Often what they said is that they had a plan in place. They reviewed it, they reviewed whether they needed to make adjustments or not. They may have made some tactical moves in light of COVID, but also the CARES and SECURE Acts. Have you found that to be the case with the advisors that you are advising?
Yeah, well, they've got some big questions. Number one, how near or far was the client from retirement, as an example? Because the biggest issue with COVID is employment and whether or not you have to work, but maybe aren't feeling comfortable about working. You have a choice about working, or you don't have to work, or you work from home just fine, right? We are not all in that same boat. So we need to understand that, number one. The second part of this, when we think about portfolios, listen, the assets, the stocks, bonds, cash, etc., mutual funds, ETFs, whatever the case is, those are invested for a purpose. They are invested so that someone can reach a goal. So the first question we have to understand, have the goals changed? And sometimes it seems so simple and clear, but advisors need to ask that question. Given the unique circumstances, has that pushed your goals further out? Has it accelerated them? Let's talk about resetting those in whatever way they need to be reset given the unique times we're in. Only then can you start to talk about, should we start shifting around our investments into or from different places? And that's a difficult question unto itself. I'll give you an example. When you've got U.S. bonds, U.S. treasuries trading at the low yields that they are trading at right now, you're getting so little from those risks to the extent there are risks. And that creates a real interesting question because a lot of advisors historically have used a little riskier or a little less risky, the 60-40 classic portfolio. Well, the 60-40 portfolio, if it is 40% in bonds, and we have to at least ask the question, could we invest in bonds during these times at all, given what they're yielding and what the risk levels are? That's a really big question that advisors need to be able to answer and potentially raise the dialogue with their clients, because the 60-40 portfolio today is not like it was 5 or 10 years ago.
Yes, we've spoken to folks such as Tony Davidow in our podcast about the demise of the 60-40 portfolio and how the 60-40 may be a thing of the past. But before we talk about that, I'd like to return to listening to your clients. We've been asking advisors what kind of activities, communication vehicles they regard as best practice with respect to client retention. Is it Zoom? Is it emails? Is there a frequency of contact that's appropriate? What kind of activities do you think would be viewed as valuable?
Well, the first step in that, Bob, as a best practice is ask the client how they wish to be communicated with. Some people do not like video. Some people are completely at ease with video. So let's first understand that. My recommendation is set up a calendar with them, an agreed upon calendar. And listen, calendars can shift over time. That's fine. But say, listen, I would like to catch up with you, whether it be every month or every 2 months or 3 months, whatever the number is. And please know, we're going to put this on the calendar because I want to make that commitment to you. You have access to me anytime. So the way I like to be contacted is via email or text or whatever. Listen, I'm going to stick to a schedule and I'm going to be there for you. But if you need me off calendar, here's the best way to reach me. I want to be there for you when and if you've got questions or concerns. These are best practices. And Bob, the reason I refer to them as best practices is because of the clarity and the commitment that is involved in that format. So the client knows exactly what to expect from you, and you have framed exactly what you expect from them. And I'm using this word expect. Expectations, Bob, the best way to define expectations are premeditated resentments, right? If they're not clear and the other person doesn't agree, we're setting somebody up for failure. So create a commitment in advance. And you know what? They'll probably greatly appreciate it because they know they have your ongoing committed attention.
So that's great advice for both young and older advisors. Any advice for young advisors who might be grappling with how best to work with their clients, given that this might be the first time they've ever experienced a situation like the one we're in now in their young careers?
Yeah. Yeah. Well, the good news and bad news, right? Young career means you've got so much of your life ahead of you. Good for you. You're not at the end. That's
Right.
something to appreciate and be really positive about. But when you have the start of your career during arguably the single greatest level of global uncertainty that maybe has
Mhm.
happened since World War II, and we don't have to debate that. That's just an example. The best thing for people starting their careers right now is a little bit of an inventory. What is it that you currently know? Education, right? What is it that you might wish to still learn? Okay, let's make learning a lifelong objective. Now, in the meantime, you may have to hold down a job, so let's not get too carried away with that. But let's make sure that that's an acknowledgement.
Mhm.
Someone who is younger and earlier in their career today, Bob, I say the most important thing that you can do is be a fox, not a hedgehog. The not the extreme deep intelligence in one narrow area. That's the hedgehog. The fox is kind of multidisciplinary. Another way of looking at this is short attention span. No, 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 no. I'm just kidding. Another way of looking at the fox is not just multidisciplinary, but multi-curious. They are curious in different topics. And earlier in your career, if you don't have a lot of attachments or expenses, maybe you're still single, you don't have a mortgage, this is the time to maybe try out a bunch of different jobs or employment circumstances and find out what you don't like and start moving ever closer to what you do like. And what you're going to be able to
Right.
learn from each of those different experiences can be invaluable towards your future success. So, doing this during chaotic times, ugh. But, but doing it during chaotic times offers the opportunity of more unique and differentiated experiences too.
So you mentioned education. Obviously, the Investments in Wealth Institute is a provider of the SEMA, CPWA, and RMA designations. I would have to think that those designations and perhaps others have been helpful to advisors in terms of the knowledge gleaned from that educational experience and the degree to which they can apply it.
Yeah, yeah, and this is boy, I get this question from time to time, and I have for the years. Given the diversity of the credentials I have or my connection to others, people ask me all the time, which one do you think is best? There is no one that is best. It really depends on what the person actually wants to accomplish in their career. But here's what I can say. We are recognizing more and more today the connection to another human being, just what that means in our life, right? The CFA designation is deep, deep, deep on investments. And if you are passionate and interested in this area, I will not suggest you look anywhere else. It's it's made my it's given me so much personally in different ways, and I'm not talking about compensation. However, what the CFA is not known for is Um, Counseling, advisory. There's about a third, maybe a little less, of CFAs who are in the private wealth business. And to some extent, they will look a little bit more like a CFP, a certified financial planner, but with a little greater depth of knowledge on investments. But my point here is the CFPs have to deal with the whole person, not just their investments. And I have a great appreciation for that. I have a great appreciation for that because helping someone often is investments are a teeny tiny part of helping someone in their life's goals. Now, when you start thinking of an RMA or a CRC for that matter, the one interesting thing about anything that goes towards retirement, and that's where those two designations go much more headfirst into retirement topics, is number one, every single person you ever meet probably has some sort of retirement goal. So if you have those skills, to some extent, you're universally attractive. I don't mean physically, I mean mentally. All right. The other aspect of that is because of the stress or the stressors that are connected to retirement, that time in someone's life. I do think some of the training in the RMA and the CRC actually brings people closer to a bedside manner that can be really helpful in the client relationship because they're parts of the curriculum. The CFP doesn't have a purposeful aspect of the curriculum that's about bedside manner. The CFA certainly does not. But I can tell you the CFA, as an example, is moving towards incorporating more and more quote unquote soft skills into the learnings. I would imagine the CFP will as well. But if I can take a quick moment, Bob, I absolutely detest the term soft skills.
Right.
I hate
Yep.
it. Now, we think about these as emotional skills versus tactile skills like being a good investor. All right, fine.
Okay.
There's nothing soft about them. Have you ever met anybody in your life who was not a good communicator, maybe was a bit egotistical or narcissistic, or maybe they were an extreme introvert? And across that range of different things I just described, you might say, yeah, and they're not really easy to be around and remain comfortable. Well, soft skills can help you get there, help you manage those relationships better. So, what I say, you may call them soft. I know just how incredibly hard they can be.
That's for sure. Yeah. So I want to, if you don't mind, I'm going to pivot a little bit. In the podcast where we talk to advisors, we ask them about their business and their practice, and whether what they had in place was adequate with respect to technology or human capital or disaster planning or crisis communication, business continuity plans, E&O insurance, custodial risk. What was the business prepared, and what's your experience been there, and in terms of the advice you've been giving folks, and what have you noticed out there?
Yeah, well, we have to respect it. So many people in this business, the advisory practice, on average, they are maybe a little higher education, maybe a little higher on the socioeconomic scale. So, working from home for most people in this part of the business is really not that big of a challenge from the perspective of they could do it. Now, if they've got a bunch of small children at home who weren't in school, that can be a Herculean task to manage. However, they have the ability to work from home. So let's be candid with each other. Those of us in or around this part of the business, this experience of COVID does not have to have been a business disruptor. And if you're getting paid based upon AUM, unless the AUM is leaving, your pay hasn't changed.
Right.
Right. So I'm a little cautious about being knee jerk about what people in the advisory world need to be doing differently beyond establishing a calendar of communication and listening more with their clients. The reality is we can do this from our mobile phone, from a Zoom or a WebEx or whatever the technology people use on the computer. E&O, well, good luck with some of the insurance coverages because almost none of them that I've come to understand cover a pandemic. So
Right.
if you've got an issue from an insurance standpoint, that's a concern because your insurance may not stand up and help you.
Yeah.
Apart from that, the cool thing is the people who are on the operations side, kind of the people in the back who make sure everything is running, all the tech is working. These people have so much more visibility than maybe they had in the past. I think that's kind of cool. They're important. And without them, a lot of these businesses wouldn't have been able to operate seamlessly or almost seamlessly when we went on lockdown, so to say. My organization, we have always been virtual. The consulting work we do for wealth and investment management firms, we've always been virtual. We all have offices in our homes, the partners. And the main reason is because we were out and about globally. Our clients literally all over the globe. We would go to their offices to work with them. So, needless to say, that got shut down. And
Right.
what we experienced was March and April personally. Let's just say, Bob, I had a lot of time to catch up on my reading. Okay. But what happened is, as the world started to kind of process, this is going to continue. And we need to continue to work and we need to continue to get better and better to build our business. Starting in May, started having a lot of clients reaching out to us saying, we need to go ahead with some of the projects we were otherwise planning. How can we do that? I can tell you I'm as busy as I've ever been right now, but I don't get in any taxi cabs, any Ubers, and I don't fly on any planes anymore. I do it from my home
Yeah.
office.
Yeah. Seemingly, as a good many people are, including myself. So you mentioned that for firms that are charging AUM, it's unlikely that their revenues have changed that much, but their profits may have perhaps changed. There's an article by Michael Kitces where he suggests that firms that don't run a healthy 20% plus profit margin may now face forced layoffs to right their expenses relative to their revenue and the fees that they charge. So, one, any thoughts about profit margins? And two, do you anticipate that advisors might be making changes to their pricing model in the wake of this?
Oh, well, I'm going to do the easy one first. Um,
Okay.
Profit margin. Well, listen, if your revenue is staying the same, the only way your profit or similar, the only way your profit margin is dropping is that your expenses are rising. And pray tell, why would your expenses be rising right now? Well, you might say we had to add quite a bit of tech infrastructure for people to work from their homes. That'd be fair. But that's a one-time hit for the most part. So I'm not exactly clear if you're getting revenues off of AUM, why your margins would have changed. For people who are not on AUM, well, yeah, your margins may change because if you, for example, charge by the hour and people aren't coming to see you, well, then your revenues are collapsing. However, if you're charging by the hour, I want to try and understand if that's a really sustainable way to run your business versus an annual retainer for the work that you do. Do I think that advisor compensation models are going to change? Bob, I think advisor compensation models have needed to change for quite some time. As I said earlier on our call, and this may be why you're asking me, if investments are a teeny tiny part of the overall client need and client engagement, then why are we charging on the teeny tiny part to subsidize all of the other important things? It creates a lot of perverted incentives. That's a bad thing. And it misaligns the way the work is done. So, to correct for that, advisors need to shift away from AUM based compensation and towards some sort of annual retainer or something of that type. Now, the challenge with that,
Hmm.
let's be candid. Every time that I've heard about an advisor who has thought about making this shift, because they agree, many do agree, by the way, they say, but Michael, we ask our clients what they think of it. Here's an offer to change. And time again, they come back to me and say, the clients say no. The clients say, I don't want to change this. And there's a fascinating little behavioral aspect to this. When someone has to write a check to you versus the fees are deducted passively and uh, let's just leave it at passively. Fees are deducted
Sure.
passively over time from your assets where you don't see it, you don't feel it. The act of writing a
Mm.
check becomes very transparent to the cost, and they don't like that.
Right.
So, what this has to be in all candor is there has to be real education that is attempted. And the reason I'm using attempted because we're talking about an emotional bias, not a cognitive bias sometimes. Cognitive bias is you mean it's cheaper for me if I write a check versus paying out of my assets? Over time, yes. Okay, let's do that. You've educated them and you've corrected a cognitive bias. If it's an emotional bias, the logic won't work. And they may still want to
Yeah.
pay you through AUM. The only question now is will you start to use a surrogate? So instead of 100 basis points, 1%, 75 basis points, whatever you charge on AUM, instead of having that as a fixed fee, maybe you say, listen, I'm going to charge you 1% on all assets up to a million, 2 million, 5 million. Pick your asset value. I don't care. And then after that, I stop. So you've really capped your fees, but it's still passive.
I agree with you. I think the world of pricing will be changing dramatically. In fact, a number of firms have even introduced a subscription model.
Subscriptions are fine. The only challenge is now we're counting on the client to keep it up,
Yeah.
to maintain the subscription. That's why I said for communications, make the commitment with them. Listen, we're going to talk monthly or every 2 months, whatever the case is, and you have access to me anytime. Well, you want to get them into that agreement. It's a very soft agreement, but it can be very powerful. And then, you know what? Something really weird happens in the market. Don't wait for the next monthly call and don't wait to see if they are going to reach out to them. And you can do this to your entire client base very efficiently. Hey, you may have noticed this happened yesterday. I want to give you some insights on this, some thoughts. And if you want, give me a call. It's about being proactive and making a mutual commitment with your clients.
As you look ahead, what kind of changes do you anticipate an advisor making with respect to their business or practice? You talk about calendarizing, client communication. Are there other changes that you anticipate advisors will be making to their practices?
Well, I'm careful about anticipating because that's the same as an expectation, Bob. And that means that I'll be disappointed invariably. No, what I've done here, I have an article that I've written that it's going to be published later this year about everything that you need to know about investing. And now notice I said investing, not investments.
Mhm.
And what I have found, because I've done a lot of work in the area of behavior over the years, a lot of work. Let's not get into that. Um, when people, everything we do in a financial plan, spending or saving, is all about trade-offs. Generically speaking, what I find is if people can understand the how a trade-off could fit into their financial plan ahead of time. What I mean by that is, listen, if markets are bad, here are some trade-off ideas. If markets are good, here are some trade-off ideas. If they can understand the range of choices, a choice architecture, if you will, from the behavioral school, if they can understand the nature of trade-offs given a certain thing occurring in the market, not as a reaction, but as an education, when those things happen to the market, it's going to be easier to make good decisions because they will have already understood kind of the range of the good, the bad, the ugly, if you will, in terms of what they can do. It's about preserving choice, but shaping the trade-offs and educating people on that. And the article is all about this. And when I say the name is Everything You Need to Know About Investing, I mean everything. It's an architecture for your entire investment career. And it's an article, not a book. Isn't that interesting that it could be distilled that easily? Because it can.
I have a copy of the article in front of me, and there are a couple things that I find quite interesting. One is a term that I suspect you coined, funded contentment. What is funded contentment?
I would love to talk about it, but I cannot take credit for the term. A friend of mine, actually, to my knowledge, created the term, my friend Brian Portnoy, who is a published author and a good guy.
I know Brian.
Yeah, there you go. What it is, let me take you far afield for a moment, Bob. How do you define happiness? So funded contentment, right, means I financed myself all the way through being contented. Some might say that's the definition of happiness. And why would we argue? If you've been able to fund or finance all the things that put a smile on your face, I could say you won. Congratulations. And you know what? Because we are each individually defining what our contentment is. The cool thing about that, Bob, is we can all win. It can be about abundance. It can be about a win-win. Nobody has to lose. But here's the question. Do you know what your funded contentment is? This goes back to my reassessing goals and establishing goals. My favorite definition of happiness, to give you another spin on this to further the dialogue, is two words, not funded contentment. How about not wanting? When you no longer want, would it be fair to say that your suffering is now over? That all comes from Buddhism, if that's something that resonates with someone.
Certainly that phrase, he wants or she wants for nothing, is well known to many people. So in the article, there are some bold phrases, bold as in format, not bold as in strong, about people choosing to save more or invest more conservatively or more aggressively or doing nothing. Is that part of understanding the trade-offs? And before you answer that, in my role as a journalist, people always ask if there's one way of doing something, to which I always say there are many different ways of doing something, and it's just a matter of examining the trade-offs and what's important in terms of what you are willing to give up to get what you need or want to get. And there may not be one right answer. There may be just points of view, opinions about how to achieve something. That's my prelude to whatever it is you might say right now.
Well, listen, trade-offs, people just have to know. And when it comes to investing, trade-offs are kind of simple, right? I can save more today to have a better financed tomorrow. But if I don't make it to tomorrow, then that seems like a complete and utter waste of time. So that means if I save less today, I'm going to have more fun today. But if I make it to tomorrow, that may not be so pleasant. Life is trade-offs. The point in the article is to frame the trade-offs and describe kind of the pros and cons of the trade-offs. In this case, every one of those trade-offs has a potential behavioral trap to go with it. And our behavioral traps, behavioral biases, if you will, they're perfectly human. They're perfectly normal. We all have them. It's not until it's pointed out to you that you have this It's a bit of a blind spot. So by delineating consistently and clearly what the trade-offs always are, I've actually helped people make much better decisions over time. So what that means is they're not necessarily going to make a good trade-off decision immediately. But throughout the article, I go back to you want to keep track of prior decisions and you want to get a sense of did that work out really well for me? Or if I had chose something different, would it have been better? This isn't about stoking or lighting a flame on your regret. No, this is about helping to train you to move away from a behavioral trap that's likely caught you in the past. The article actually has an immense amount of behavior behind it, but I didn't use the language and I didn't spell that out consistently because I don't want to scare people.
So can you talk about the steps people need to take, what they need to know, what they need to do?
Well, number one, know that each of us controls next to nothing. So stop trying to control things that you can't. Give in to that freedom to be able to say, I don't know. How about that for a response? No, I'll carry on. I'm not going to stop there. Listen, know that the world doesn't owe you anything. Quote unquote, from another source, it was here before you. All right? So if the world doesn't owe you anything, that means that you get to create your future within reason based upon the decisions you make. Well, isn't that nice that we get to create our own future? What do you want it to look like? Visioning, goal planning, that's what we're talking about. Know that you need to do individual steps like these. And if you take these steps, and by the way, there are very few, Bob, you've seen the article that will be published. This is not a book. This is an article. It's bigger than a pamphlet, though, for people who haven't seen it yet. It's bigger than a pamphlet. If you can read this article when it's available and you can take the time to understand it, 10 pages, give or take, with lots of pictures, charts. And I don't mean charts of numbers. I mean pictures and charts. I dare say that if you can digest those 10 pages, you do have everything you need to know about investing. Oh, by the way, a quick comment on investments, because I said that's not part of the paper. The reason I don't talk about investments in the paper is because there have been a gazillion books written about investments. And I'm so sorry. Go buy an index fund, and you know what? You'll be in pretty good shape. So I didn't really need to spend a lot of time in investments. It would have been counterproductive.
In the advice you give professionals, there's one thing that caught my eye. Can you talk about coaching and the value of coaching? In a previous podcast, we talked to Cindy Pagliaro of Vanguard, and she had done some research about what clients of advisors value. And one half of the value was around emotional support or coaching, not necessarily investment performance.
It's all of the above. It's all the above. Listen, we're all human, which means, another way of saying, we're all biased in some way, shape, or form. When you have a coach, it's someone who sees differently because they're not you. And they can be a sounding board. They can be a safe place to express fears. Okay. If they know the business, they can help you consider other perspectives, other ideas. Listen, it's really simple. If we want to be a profession, if financial advisors want to be a quote unquote profession, every other profession that exists makes use of executive coaching. Athletes, musicians, well, that's pretty common knowledge. They use coaches all the time because it's feedback that's safe, because they have your best intention. Their job is to make you better. Well, we know of a lot of executive coaching that exists. Well, when it comes to your job being about planning for the future, whether it be investments or insurances, You're planning for the future. Well, the future is unknown,
Hmm.
hasn't occurred yet. So you're actually doing work to try and make the best decision you can about something you cannot know. If you can't admit that you might benefit from talking to somebody else, then my fear is that you will take too great a risk at some point in time for some of your clients. Everybody could use someone who, Bob, I'll say it as gently as I can, someone who is able to call bullshit on you.
We could all benefit from that. So, in the time remaining, is there anything we haven't touched upon that you'd like to
Yeah.
discuss, or is there something that you've already discussed that you want to reemphasize?
Well, I wanted to basically just communicate to everybody that we get to form this future for ourselves. We get to create it. So we started this call talking about the advisor issues because of the unique pandemic that we're living in. Okay. Yes, yes, yes. Let me raise that up one level for all the listeners, because I don't know who's listening and whether they know me or not. To all the listeners, I have a diagnosis, medical, that says that I'm likely not going to still be with this world in 3 to 5 years. So, and it has nothing to do with COVID. So, my point of saying this is you don't hear me stopping. You don't hear me lamenting. Yeah, the world is in a unique point. You know what? I got my own unique situation that is a bit more severe for me personally. But you know what? It's not going to stop me from trying to make a positive difference. I have a lot of experience. I wrote that article that's to be published to make a positive difference. It's not stopping me. I still have things I'd like to accomplish. With that said, yeah, Bob, maybe you can share a little or you can afterward about my 2 books, because as I think I mentioned earlier, those books that I wrote, they really are my purpose. And they're on Amazon, and maybe you can share more detail about it. My request for your audience, if you liked any part of this podcast, go get the books, steal my ideas, and populate them. Be a magnifier for something for me. If you agree, if you like the ideas, you don't have to magnify the stuff you disagree with. That'd be silly. My point here is we can all do things that live long beyond who we are. Maybe leave the world a little bit better off. Wouldn't that be nice?
I have read, I have to be honest, I have read the first one, Let's All Learn How to Fish to Sustain Long-Term Economic Growth. It's on my bookshelf, but I have not yet read Get to Work on Our Future. And I think this will be the impetus to read it. I should mention, too, that there's a website where people can learn more about you and the books. It's www.letsalllearnhowtofish.com. That's all one word, no spaces, no underscores. Letsalllearnhowtofish.com.
Yes, those are the 2 books that I referenced, Bob.
Perfect. So, Michael, I do want to thank you, and I do want to invite you to come back on future podcasts, and we can talk about the topic or trend of the day or something that you're researching or advising advisors about. It would be a pleasure to have you come back on a regular and frequent basis, and I do want our listeners to read when it's published in an upcoming issue of the Investments in Wealth Monitor, your article, Everything You Need to Know About Investing.
That is correct. And on that website, they'll get some more information on me and on both books and how to get them. Because I can tell you the first book, you can get the first book for free. Bob, it'd be my pleasure to come back, and I only hope that your listeners agree.
I'm sure they will. Thanks again, Michael.
All the best, Bob. Cheers to all of you. Bye-bye.
Thank you for listening to this episode of our special series, Exceptional Advisors in Extraordinary Times. My guest was Michael Falk, a partner at the Focus Consulting Group. If you enjoyed this podcast, then don't miss our Exceptional Advisor webinar series hosted by Tony Davidow, available at investmentsandwealth.org. Stay up to date and have the latest episode delivered straight to you by subscribing through iTunes, Spotify, or wherever you get your podcasts. The Institute stands ready to help you as you navigate these turbulent times with new resources, research, programs, accommodations for candidates, and certificates. For more details on resources available, visit www.investmentsandwealth.org. The Institute is a professional association, advanced education provider, and standards body for financial advisors, investment consultants, financial planners, and wealth managers who embrace excellence and ethics. Through our events, continuing education courses, and acclaimed certifications, which include the Certified Investment Management Analyst, Certified Private Wealth Advisor, and Retirement Management Advisor certifications, we deliver Ivy League and practical education for investment and wealth professionals. The Investments and Wealth Institute has been helping investment and wealth professionals become exceptional advisors for over 30 years. Please visit us at our website at investmentsandwealth.org to learn more about our certifications, conferences, online learning, and continuing education programs.